Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, equities across the board were higher coming out of the overnight. China data was better than expected. The Nasdaq set a new all-time high, but major three-star resistance in the S&P, something we could not get out above yesterday, and it could not get out above it again today. We saw profit taking after the open, 29.22. That's our level, and yeah, it ticked above there, but it really couldn't hold above there. Was it exacerbated sentiment that really got it, that started to turn things overall? Maybe. Wholesale inventories came in lower than expected, which is actually a positive for the economy, but positives on the economy can also start to get the Fed engine going a bit too. Maybe that started to turn things a little bit. Could be a number of reasons though, but again, we'd like to think maybe a little bit of exacerbated sentiment with the China data that coming out of the overnight. Things were a little ahead of themselves. What they're doing right here is just starting to cover back a little bit. Now, we did talk about in the Morning Express, when it's the Nasdaq, which is really the leader right here, and as it's breaking out of that 2-week-long consolidation, is very bullish above 76.64. So watch that level. Now for the S&P, it hasn't broken out. It's really been in that breakout mode for that near-term breakout, as we discussed since April 1st, where the Nasdaq didn't do that. Major three-star resistance overhead in the S&P is keeping a little bit of a ceiling there. And if it has, which it has traded below 29.10 area, could be a little more profit taking. So watch that, and we feel the tape on the S&P is a little vulnerable below there right now. Watch where this stuff is. And again, stay nimble, but the Nasdaq ultimately is leading. Now taking a look at crude oil, it's right around $64. It could not get out above that 64.60, 64.70 ceiling from last Tuesday, and again, it's starting to see a little bit of profit taking. The EIA data was not as bullish as as was expected. On top of that, you did see production, though, come down 100,000 barrels per day in the lower 48 states, which really offsets it. So maybe it's just the broader market bringing things in a little bit right now. Crude oil has been bullish. We've been upbeat on crude oil. You want to see it hold out above 63.80 in order to stay bullish. Now, lastly with gold, gold closed below that floor of support at 1280 yesterday, and it's below there now, and that leaves it near-term vulnerable to trade down to about 1255. Watch this tape right here. Need to get not only a close above 1280, but really close back above 1290 in order to neutralize its immediate-term weakness. However, treasuries are trading off the lows here, and that is supportive to gold in the safe haven market as well. But treasuries are also a little overdone. They did get hit pretty hard in the last few days. So watch where this could bounce back up a little bit in the treasury market after hitting that some decent support down there. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.